Hello everyone, my name is Dan Veru and I'm the Chief Investment Officer and a partner at Palisade Capital Management. On behalf of the Small Cap Core team of Mark Shapiro, Kyle Kavanaugh, Don Brock, and Garo Norian, we thank you for your support. Our partnership with Goldman is a little over 2 years old now, and we have enjoyed working with everyone at the firm. This is the first time that I've had the opportunity to speak with you, and I hope that I will have the opportunity to share our thoughts on small cap stocks and other topics of interest. A word on Palisade. We were started in 1995, and the small cap core strategy has always been a cornerstone of the firm. We're also managers of convertible bond strategies, which I mention simply because of the high correlation of small cap stocks to high yield and convertible bonds. Having that insight, particularly this year, has been very important and has served us quite well. The small cap core strategy is a disciplined, research-intensive, low-turnover strategy focused on profitable companies that dominate a particular niche. We let our winners run, but we are always looking at new companies that do something differentiated and innovative, allowing them to also dominate a particular niche that they might be addressing. The focus on profitability and cash flow generation is extremely important and is something that is a constant through everything that we do within the strategy. There are times, however, when loss-making companies can lead the index, and it can be a headwind for our performance in the short run. So today I'd like to share some of my thoughts with you as we move through the second half of the year. As someone keenly aware of the macro forces impacting the world economies today, I'm optimistic that growth might be on the upswing around the world as the year goes on. The Russell 2000, which in the first quarter dropped far more than the S&P 500, staged a much stronger performance in the second quarter and actually outperformed during the course of that quarter. I'm also observing these breadth blowout days where the index not only rises sharply, but has very broad participation and outperforms other larger cap indexes. Those days seem to correspond to progress made on the vaccine front or tied to positive economic data or optimistic news on the pace of reopening of our economy. In many ways, the Russell can be thought of as the reopening index because it has a lot of cyclically oriented companies like industrials, materials, and banks. I believe it's positioned very well for a day when the virus and its terrible economic repercussions are behind us. I'm also noting recent weakness in the US dollar, which could also be an early sign that global growth is starting to improve. And small caps are responding to that as well. Given the exposure that the Russell has to industrials and materials, there is an inverse correlation, and a weaker dollar can be a tailwind for those companies within the index. We are early in the earnings season for small cap stocks, but so far there is some cause for optimism. The pathway for the Russell is going to be far from linear, particularly as we enter the election season in the fall. I think the pace of the reopening of our economy is going to continue to be uneven, but as we move past COVID-19, the stage is set for better performance for the Russell 2000 relative to other more pricey indexes like the S&P and the NASDAQ. Again, on behalf of the small cap team and all the other associates and partners at Palisade Capital, we thank you for your support, and I look forward to updating you again as the year progresses. Thank you very much.